What is the big inflation number going to tell us today? Will US reporting season hurt or help stocks going forward? And is EML Payments DEAD after having the luck of the Irish? I'm Peter Switzer, he's Paul Rickard, and we're doing it Zoom style, and this is Mad About Money. Let's kick off with the big inflation number. A lot of interest rate warriors will be watching. What do you reckon is going to happen?
Well, that's the $64 question. We'll find out at 11:30. I mean, the market is looking at a quarterly number around 2%, an annual number of 6.3. I think a core number for you about 5.1, but there are tips as high as that annual number could go be not 6.3, could even go upwards towards 7%. So expectations are out there for a bad number. And I guess that follows what's happened in every other global economy. Typically, all the inflation numbers have overshot. So despite the crunching of the numbers and 6.3 being the consensus, people are certainly concerned that this could be a lot higher, and we'll see what happens. But if we get a high result, that means higher bond yields. It means probably downward pressure on equities and more nervousness in our market, and the expectation that the Reserve Bank might have to go harder next Tuesday.
Yeah, and harder, of course, would be 0.75% rather than 0.5. Interestingly, when I interviewed Michael Knox from Morgans on Monday, he thought his calculation said 5.8. I'd love to see a number less than 6. I think that would really help confidence. It would mean that the RBA would definitely only do 0.5%. But Knox thinks that the RBA could go 0.5 in August, September, and possibly October. And that would, I think, would knock a lot of people for a 6 in terms of home loan repayments.
Yeah, look, it's very hard to know with this quarter, Peter, because our collection of data also, you've got to question some of the, the way the data is collected from the ABS. I'm not a big knocking the ABS per se, but there is a lot of, I think, there's less, it's not as perhaps as robust as one may make it. It's an index after all. It's got predetermined amounts into it. In many cases, it doesn't actually reflect current consumer spending or what really happens, but you get all sorts of one-offs caused by, alcohol taxes or higher childcare fees or the abolition of childcare fees or the floods in northern New South Wales, what impact they'll have on fruit and veggie prices. It is really a hard one to know. And then we've got petrol over the top of it. So just as the market, as you say, is probably fearing the worst, the surprise one would be the other way. But as I said, we're in pretty well every inflation number that's come out in the last few months that I've been seeing, overseas and here, it's been on higher than expectations. So I guess that's still the risk.
Yeah, I guess we could say that Australia is an exceptional country, and if we may all surprise everyone, as we did going 30 years without a recession. But I read something brilliant this morning, Paul, which of course I wrote, and I made the point that all the economists are guessing, and so is the ABS. We're all guessing. We don't really know. And when you ran through that litany of things that could have been involved in terms of floods and whatever, that really even makes it harder for the guess merchants called economists. And I'm one of those as well. So I certainly understand it's a tough job, but I'm really keeping my fingers crossed it's not as bad as we have been seeing in predictions. Let's go to US reporting season so far, Paul. Early part was looking pretty good. I think 70% of the 21% of companies that reported were better than expected, which is great to see. But this week and overnight, some big companies just didn't really cut the mustard, did they?
Yeah, look, it's a bit mixed, Peter. I guess in some ways I'm not surprised, because I think what the market is reacting most to is some of the forward-looking statements. And you'd expect, I think, CEOs to be a bit conservative, particularly when they know that inflation's an issue in the US. Their cost bases are under pressure, input costs are rising, and interest rates are going to go up, which might slow a bit of consumer spending. So you might be a bit cautionary both in terms of looking ahead at the next quarter. On the numbers, the raw numbers, that by and large, I think they're ticking most expectations. But Microsoft last night, maybe a small miss. The Walmart one, I think, was sort of look, I'm not sure if it was a miss or not, but it was really what Walmart said in terms of cost pressures. Now, we shouldn't be surprised about that. But the US market sort of hanging in there, but I'd say, you know, halfway through the season, this is a really big week. You know, we're probably a bit 50-50 as to how it's looking.
Yeah. What I've been staggering about, Paul, in fact, Alphabet, which didn't report all that well, its share price went up. But what's interesting, if you look at these big tech companies that have lots of exports, Microsoft revealed that $0.6 billion was lost because of the exchange rate. And of course, you know, the Fed's ahead of the curve in terms of interest rate rises. It's pushed the US dollar up. I reckon the US dollar will start to fall over the next few months as other countries like us start raising interest rates. And that could help US companies. I think that's part of the reason why these companies aren't selling off big time, that there is an expectation that US dollar will come down and will help a lot of these companies. I think I'd like to keep my fingers crossed on that one.
Yeah, I mean, look, the US investors never think about the currency because they're so, just the States and else around the world. But of course, most big US corporations are multinationals and they earn, more money outside the US than they do in the US. And of course, the currency, the US dollar, has been so strong. In fact, just last week it hit parity against the euro. So, it's bounced back a little bit, but almost unheard of position. Now, I think people forget that the Australian dollar has been really strong against every currency with the exception of the US dollar. So we look like we've been under pressure, falling to sort of 68, 69 cents, but we're, at multi-year highs against the euro, against the pound sterling, against the yen, against the Kiwi dollar, pretty well every other currency in the world. So I think you're right, Peter. The US dollar can't keep on going up forever and that might actually stop the Fed putting the brakes on the interest rate increases a little bit, just because they start to get worried about it.
Yeah.
The US dollar can't keep on going up forever. And at some stage, the Aussie dollar is going to go a lot higher against the US dollar. So
that's the way you and I are punting, mate. Let's go to the last one now. EML Payments was a very good company. Because of Brexit, it had to get another bank. It couldn't use the Bank of England, and so it's selected Ireland, the Bank of Ireland, and the Bank of Ireland has been giving it a shellacking.
Yeah.
Do you think this company is DEAD, Paul?
Look, I'm not sure, but I think there might be perhaps just a little bit of value starting to emerge. I mean, things can't get much worse for EML Payments. They've lost their CEO. They've appointed a new CEO. Yet to see how that really plays out. We all thought the Bank of Ireland stuff was under control. Now we found out yesterday that, or the day before, that it's not. Share price got thumped. There are some, and it's obviously its growth plans in Europe are sort of stymied until it gets that thing right, and that's now not going to be till 2023. Share price has crashed. You've got to ask what else can go wrong for the company. Now, there are a couple of tailwinds. Rising European interest rates is actually a bit of a positive for the company. They benefit from higher interest rates. Maybe they can solve that problem with the, European regulator. Look, we still know there's a good underlying business there, Peter, because they've done some really good things. They've got some great clients. So I'm sort of thinking about EML Payments a bit like Zip. Whereas I was horribly wrong on Zip, but I bought in at $2 and it went all the way to 43 cents. And I bought in at $2 when it was once 12. I thought I was pretty smart. Zip has had an amazing rally in percentage terms in the last week and a half. It's now at $1.02. It's up 150% almost in 2 weeks, which tells you what can happen when some of these stocks turn around. Now that's a long way from getting back up to $12, but and this is where the trouble with percentage increases goes astray. But it does show you what happens when a company starts to focus what it needs to do. It's cut its costs, it's wound back its offshore operations. It's really going to just focus on the Australian market, and there's a good business there. We know there's a good business with EML Payments too. Yeah. And maybe in 93 cents, for the speculator, you might have to be patient, but that could be, you've got to buy when others don't want it. I'm just sort of putting out there is what else can go wrong with this company. Yeah. I won't say we've bottomed, but there might be a little bit of value starting at some point there.
Yeah, and I know Ron Shamgar from Tamman Asset Management, when I interviewed him a couple of weeks ago, they're pretty big holders of EML. He's very disappointed about some of the mistakes the company's been making. But he did say there are a lot of number of private equity companies sniffing around the company. So the lower the price EML goes, the more likely these private equity companies could come and put a bid. So it's going to be very interesting. I don't think the company's dead, but I agree with you. Gee, it's had so much bad luck lately. It's going to be interesting to see if they can turn the thing around.
Well, it's a luck of the Irish, Peter. Is that right, or not? I don't know.
Yeah, I'm not sure if that's supposed to be a cynical line or not, because I always thought the Irish didn't have a real lot of luck with the potato famine. But apparently, when I looked it up, it actually means that despite their difficulties, the Irish end up on their feet. So let's hope EML has a bit of Irish. And by the way, its founder, I think, was actually of at least Irish heritage. That's for sure. Paul, thanks for joining us. I'm Peter Switzer. He's Paul Rickard, and we're mad about money.